Welcome to History Explained, where we illuminate the past to better understand our present. I'm your guide for this weekly journey, 7 days of global change in under 7 minutes. Today is Sunday, June 22, 2025. As we do every Friday, we turn our focus to economic milestones, the breakthroughs, breakdowns, and bold decisions that shaped the financial world over the past week. This week, the global economy stood at a crossroads, caught between innovation and instability, opportunity and uncertainty. We begin in Brussels, where the European Union finalized terms for its landmark AI investment framework on June 20th. The new policy unlocks €45 billion in funding through 2030, aimed at boosting domestic AI startups and reducing reliance on US and Chinese tech giants. EU Commission President Ursula von der Leyen called it Europe's digital sovereignty moment. The plan links ethical AI with strategic independence, a reminder that in today's economy, technology isn't just a market sector, it's a national asset. In Argentina, inflation hit 224% year over year, the highest rate globally outside of Venezuela. On June 18, the central bank raised interest rates again in an emergency move, sending ripples through South America's fragile debt markets. While President Javier Milei maintains his commitment to a free market overhaul, protests across Buenos Aires suggest the social cost of reform is mounting. The situation echoes previous Latin American economic collapses, where shock therapy produced fiscal discipline, but at the price of democratic stability. Meanwhile, in the United States, the Department of Labor reported that real wages grew 0.6% in Q2, the highest quarterly jump since 2021. Yet Wall Street's reaction was mixed. Some investors saw it as a signal of a resilient consumer base. Others feared it would reignite inflationary pressure, complicating the Federal Reserve's path to rate cuts later this year. On June 21, Fed Chair Lisa Cook reiterated a data-dependent stance, drawing parallels to the late 90s policy balancing act between growth and overheating. In Nigeria, President Bola Tinubu unveiled a major fuel subsidy reform plan on June 17 that could reshape West Africa's largest economy. Long viewed as both a populist cushion and a fiscal drain, the subsidies will now be gradually redirected toward public infrastructure and health spending. Economists praised the move, but unions have called for a nationwide strike, fearing immediate price surges. This moment recalls similar reforms under Olusegun Obasanjo in the early 2000s, which set off waves of both growth and unrest. And finally, in China, real estate developer Evergrande's restructuring talks collapsed on June 19, renewing fears of contagion in the country's already strained property sector. With nearly $300 billion in liabilities still unresolved, the collapse highlights deeper structural vulnerabilities in China's post-pandemic recovery. It's a stark contrast to the country's infrastructure-led booms of the 2010s, and may mark a transition towards slower, more consumption-driven growth, if Beijing can navigate the turbulence ahead. From central bank corridors to construction sites, from tech boards to town squares, this week reminded us that economics is never just about numbers. It's about decisions, who makes them, who they affect, and whose future hangs in the balance. Thank you for joining us for this week's episode of Economic Milestones. If today's breakdown gave you new insight into the forces shaping our financial world, subscribe, share, and drop a comment below. Which of these stories do you think will matter most 5 years from now, and why? Up next, our Saturday episode, where we explore military history through the battles and strategies that continue to echo today. Until then, I'm your guide for History Explained, where understanding yesterday is the key to navigating tomorrow.